This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, November 14th, 2014. Euro dollar. So the euro into Friday remains locked within a consolidation over the past several days, mostly been in a consolidation for the entirety of this week. And the key levels that you need to pay attention to are 123.58. That's the low from last Friday, the yearly low. And above, you want to pay attention to the recent weekly high at 125.10. A break on either side would help determine the next key direction. If the market takes out 125.10, then you're looking at the potential for a more deeper correction or a correction up towards the 50-day moving average, which comes in around 126.60 or just under 127. And the 50-day moving average has done a very good job of capping rallies in this market over the past several months. So if we do see a rally up there, that's going to be a rally where you're looking for a lower top ahead of what should be a bearish resumption in this more well-defined downtrend. Inability to establish a close above 125.10. So even if we break above 125.10, I'd recommend waiting to see a close above 125.10 to confirm more of a correction higher. But inability to break above 125.10 and a close above 125.10 will put the pressure on the downside, and then a break below the yearly low at 123.58 would open that bearish continuation down towards the next objective for this market, which comes in at 120.40. That's the 2012 base. Sterling dollar. So cable has had a nice round of setbacks this week after breaking to yet another fresh 2014 low on and 14-month lows on Friday. The market trading down well into the 156s. And again, the next measured move following consolidation that we had seen roughly, between 162.30 and the 158.75, that measured move of that consolidation opens the door for a move down towards 155, and that's sort of where the market is looking to head. Now, only back above 159.45, that's the high from this week, would compromise the immediate short-term downside pressure. Dollar yen, another day, another 7-year high for this market, which is traded up at the time of this video to above 116.30 and into the mid 116s. But again, given the extreme overbought technical studies in this market on a daily, weekly, and monthly time frame, there is intense risk for some form of a corrective pullback over the coming sessions. Key support for this market comes in all the way down at 113.86, and certainly we could see a move back towards there. A break below would open more of a correction into the 112 area. But ultimately, the trend remains intensely bullish. It's just a question of waiting for a bit of a correction before the next medium-term higher low and bullish continuation. Euro Swiss. So Euro Swiss continues with its decline since breaking down below the previous low in September at 20.45. The market is inching ever closer to that critical 120 barrier. A break below this barrier at 120 would open the door for an acceleration, an intense acceleration of declines, but inability to break below 120 could open the door for a bullish reversal back above recent highs that we had seen, range highs going back to the month of October around 120.80. Ultimately, a break above 120.140 all the way up at 120.140 would be required to force a shift in the structure. Aussie dollar. So Aussie dollar had enjoyed a bit of a correction this week with the market trading from the recent yearly lows down at 85.40 all the way up to 87.65, but the market is now looking to put in a lower top following that break that we had seen earlier in the month below the previous yearly low, which opened the door for a fresh downside extension following the break of this bearish consolidation through much of October towards the 8,400 area. So look for a lower top in Aussie dollar, and really only back above 89.11 would shift the structure. Dollar CAD. Dollar CAD is looking to put in its next higher low above 11.22, potentially now at 12.81, the low that we had seen on Wednesday, with the market looking for a bullish continuation back towards the recent yearly highs of 14.67 and then above towards 1500, which guards against an eventual test of 120 further up. Really, with the market so bullishly aligned, only back below 11.22 would compromise the outlook. Kiwi dollar. So Kiwi dollar has enjoyed also, like Aussie, a nice little recovery over the past week, with the market trading up to a high of 79.30 about. But the market is expected to roll back over given the broader underlying downtrend and recent break of an October consolidation and October bearish consolidation. and a break back below 76.60, the current yearly low, would open a measured move downside extension towards 7,400. Really only back above 80.35 would compromise the immediate bearish outlook. SPX 500. The SPX 500 has now raced to another record high, or has put in another record high on Thursday, with the market trading all the way up to just about 2049, so just shy of 2050. And a bearish doji-like close on Thursday could be setting the stage for what is and what should be a necessary corrective reversal in this market back down towards the 2002 level at a minimum. Again, this follows an intense recovery of over 200 points since the October 15th low. Again, a break below 2031, the low from Thursday, would do a good job of accelerating declines and opening a healthy correction. Inability to break and close below 2031 would, however, keep the pressure on the top side and suggest that the market still wants to put in another record high. Gold. So gold has been consolidating for much of this week below that previous critical support that was broken at that 2013 multi-month support that was broken at 1180. The market has been consolidating around 1150. And again, since following this break below 1180, this has set the stage for a measured move downside extension towards 1100 in the days and weeks ahead. So that is the story, and any rally should be capped on a short-term basis into the 20-day moving average, which comes in just under 1200, and ultimately only back above 1256 would really force a shift in the structure here. So that's it for today, and that's it for this week. Wish everybody a good weekend, and we'll see you back on again next week.